Okay, you are welcome to this channel once more. Last time we discussed how we can use pin bar to set up our trade. How we can use pin bar, that whenever we see pin bar either at the premium side or at the discount side, what we can actually use pin bar. So if you had adhere, or if you understand what pin bar can do for you, you will actually be a good trader. Yes, and patience is needed on your side to wait until you see it confirm. So today I'm going to be talking about 3 things that will help you in this market. So before much I go in, do not be afraid of technical analysis. I say do not be afraid of technical analysis. Even before I started learning the candlestick pattern, I have never been afraid of it. So do not be afraid when you see charts. Always be courageous, because I'm here to help you so that you will understand. So in this video today, make sure that after said and done, you give me a like button. Also subscribe to this channel. Okay, now we'll be talking about liquidity void. Liquidity. And what is liquidity? In simple terms, it means money. Money. And where does liquidity lies? Liquidity lies at the premium side. Liquidity lies here. All these things are liquidity. Yes, these are places that liquidity lies. We also have internal range liquidity. We have external range liquidity. Now, we are looking at Matic USDT. Matic USDT. You know, previously I told you that whenever market rallies up from the buying zone, here we can determine a buy zone here. The market bought to this extent and retraced a little. Then it fires up again and fires up again, and then retraced. In fact, the market reverses. And when we talk about liquidity void, or when we talk about vacuum in the market, when price moved up from here, and we are talking about the price as of then was $1.74, and price got to $2.93. I mean, what will you do at that point in time? Is it not to sell? Yes, because if you have got the price at this point and it got to $2.93 or 92 cents, you have made enough profit, and you need to move out of the market. And looking at our chart here, we are using daily chart. What we are using is daily chart. Yes, the price moved up. Remember, the price moved all the way from $1.73. That was where price moved up from, and got to $2.93. That is a massive profit. Now, if you do not take profit, the market will take it from you. Those who are alert will take the profit away from you, and you will lose your money. In fact, you will come back to zero, almost where you start from. Because if you are traveling to a particular jurisdiction, you will also return to your point where you started. And look at it play out here. When I say void, when the price moved up from $1.73, look at it, $1.73. It now rallied to $2 92 cents. Now what happened? Sellers came in and they shut the market. It started coming down. It started coming down. It started coming down. Till $1.89. Remember that price moved all the way from $1.73 and go to $2.92. So what I mean by void is this: that price will come back and cover the space that it created. Yes, it almost covered the same space, the same area that it started from. And that is exactly what we see here. Price moved all the way from $1.72, now go to $2.792, and now came back to $1.89. That is what we are talking about. A void, a covered. It covered that vacuum that is have created. We can also call it reprising. We can also call it reprising. And once price come back to the buying zone, it does not stay long there. You can see what happened here at this place now. Price now came down. As it came down to that place, it rallied up again. That is a daily chart. It rallied up again. That's why you see that pin bar. It rallied up because a whole lot of persons knew that this is a buying zone. Since if they have missed buying from here, because buying from here is highly risky. Buying from $2.70 something cent is highly risky. So they have to wait and place their order at this buying zone again. These are ways you can trade. If you have missed your entry point, locate where price swinged. Locate the impulse price swing, because price swinged from this region down to $2.92. Now came back to this. And what will you call this? If you use your Fibonacci to check, you will see that price has come down to a discount. It has come down to a discount price. And once price passes 50% or the midpoint, there is the equilibrium price. Once price passes 50% of what it has done and go low, that means it has become a discount market. And at this point, you should buy. Yes. And what are we seeing again? Price came down all the way to $1.90 something cent. Now start again rallying. And you see the pin bar. Look at the pin bar. Yes. When it closed, we saw this candle open, and it's a bullish candle, and the markets continue to rally. It has, as we are talking, the market is at $2.28. But what happened yesterday, the day before today? It was at $1.90. So if you had bought here that yesterday at this buying zone, you would have been making profit by now. That is how you can trade. Yes, because void must be covered. It must come back to the original place. If possible, doing 70 or 80% of what it has bought. It will always come back to that region again and test it again. So if you have this at the back of your mind while trading, it will really help you in your technical analysis. You look at it very well. So okay, if the price has shifted, you weren't early enough, wait. Price will always come back to the region where it started. It might not actually complete the extent that it bought from, but it will come back to that region again. So all you need to do, patient, and apply your trade. So as we can see, that was exactly what happened. So we can go on and locate this void that we are talking about, that price will always come back. Price will always come back. Okay, here is another buying zone. We saw impulse price swing. Price swing down to this region and did a little retracement. When he did a little retracement, price now, we had another impulse price swing, because this thing, if you check it on your Fibonacci, it did not reach 50% equilibrium price. Now price swung down to $2.22. Now price came back to where? $1.50. And where did price move from? Price moved from here, $1.23. It did almost 80% coverage. That means what I'm giving you this strategy so that you can use it to determine when to buy and when to sell. If you miss this entering point, then another entering point is here. You miss this one. Wait, price will come back to that region again, and that is exactly what you see here. It actually came back to that place again. And what did you see? A bot got to this extent, and then it continued down to this extent, and it came back all the way from this place again to cover the extent that it has taken. That is the reason why when it has created a high, a new high, make sure that you should be anticipating sell, because people who bought from all the way from this place have made enough profit, and they will sell and wait again for price to come down. Price will continue to, or the market will continue to do the same thing over and over again. It doesn't change. The only thing is that, do you understand how this price action works? If you understand this candlestick pattern, it will really help you to do your day trading, your, depending on the hours here. If you're a scalper, you can use it. 15-minute chart. In fact, anywhere, any of the charts, any of the time frame you use, you will see this void being covered. If price has moved up sharply and got to a particular region, wait, it will come back. If possible, it might come back and even, okay, look at this place. When we had an impulse swing from here, it got to this area, then retraced a little, then fired up, and still come back to that same place again. It went up a little, then retraced, then fired up to offset the previous high. So have this at the back of your mind, that price will always come back to where it started. Okay, now we have another price swing here. Look at it. That was when Matic was $1.04. Price went up all the way to $1.56 and now retraced to $1.27. Isn't that 50% or the midpoint? Yes, it came down. It came down. Now that is another entering point, because the overall scenario is bullish. It's going up. Now price went up again and got to $1.69. Now came down again to $1.29. Now still went up again to $1.70, because the overall scenario is bullish, is going up. Remember that price will always come back and cover what it has done, no matter the time. So how many days did it take it to return from the time it moved up. We count. Price moved all the way from here. It took it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 35. 35 days. It took price 35 days, a month and 4 days for it to return to the zone again. And remember what happened here. Immediately price got here. That's why you see this candle wick, the shadow. Immediately price came back to this place. People have placed order here. That because they knew or they understand the price action. That's why they put their buying here or buying order here. The institutions who have big money, they position their trade here because they know that price will always come back to test where it started. And I call this vacuum cover or liquidity void. It came back to cover the extent it has bought, and the price moved again from that area up and continue to come down. You can see how it continued to come down. Okay, that is how this price action works. So it will always come back to the same place it started from. Look at here, we have a buying zone here. It bought from 0.73 cents and go to $2.70. Didn't it come back? It came back to that same place again. It came back to 0.75 cents. That is what we are talking about. Liquidity being covered. Because once price swings up, goes up, the popular saying, say anything that goes up must surely do what? Come down. That is what is here. If you go up, you must surely come down. So have these techniques in mind. It will really help you. If you are using 15 minutes chart, if you are using 1 hour, daily, or any time frame at all, remember that price will always come back to the same region. Okay, let us try 4 hours. Okay, let's try 4 hours. You can see that. Let me shrink the chart so that you understand what we are talking about. We have a buy zone here. Price swung. Okay, let me start from here. Price went up from here. Now got to this extent. Now returned at a discount area because something that went up from $1.93 and got to let's say $2.30 now came down to $2.03. Isn't that a discount enough? Yes, that is another buying zone. People now place their order here and the price went up to what? $2.73 and now retraced a little because the overall scenario is bullish. It went to $2.93, and once price touches a new high that it has never touched before, it will always come down immediately. It does not stay long there, and that was exactly what we see. We can see that swing high occurred there. How do we determine swing high? Whenever you see one candle at the rear, at the left, one in the middle surpassing all, then another candle on the right, immediately that those three candles, the last one closes, once the fourth one open, sell the market. It must surely sell. First of all, it came down and covered this area that it started from. Then now came down again, started coming down until it got to this area. Is it not where this place that the price started? Look at it now. it came down, and we call it void. So you can use your calculator, calculate each of the candle represent 4 hours. Then you will check how many hours that it took price to get back to where it started from. Price will always come back to where it started from. So for you to determine your swing high, once 3 candles, look at this three candle, one in the middle, you see that's doji. Immediately it closed. Another one, it does not matter the color. And that one opened. Immediately that one closes. The next candle that is opening, put your sell. It must sell. And that is exactly what you see here. Price went up. Then cover the same place that it started. It went up from here, go to $92.92, then came down all the way to this extent, and all the way to this point, and vice versa. So that is how you can trade, because price will always come down to cover the void what it has created. You can see it here. It came down all the way from here. Price came down from here down to this place. And remember, I said earlier that once price got to a discount, look at this. Price here, it was $2.12, and now price came down all the way to $1.73. Isn't that discount enough? And that is the reason why you saw this candle weak, the shadow, because people have placed enough buy in that area, and that was the reason why price went up sharply. Remember that whenever price go to a discount, how do you determine discount? If you are using your Fibonacci, anything below 50% on the equilibrium, the midpoint, anything below 50%, 65, 70, or 75, is a discount market. Price has gone to a discount, and price does not stay long in a discount area. It will move back to where it come from. So make sure you itemize those things. Once you will be able to figure out all these things, you will trade like an institution. You will know where institutions, where they place their buy order. Okay, look at, how do we know when institutions are in the market? Look at this engulfing candle, bullish engulfing candle. You can see the price sold down to this place. Now the opening of the buy this thing, and it engulfed this candle. That's impulse price swing down to this extent, because an uninformed money, people with little money, cannot move price with this sharp. With, you can see the body of the candle is full of charge. And remember, price came down again to discount, even to equilibrium. But remember that once price passes equilibrium, the midpoint, is now a discount market. And that is the reason why I told you about pin bar. You can also locate the pin bar in here, that you can use pin bar as your trading strategy. And when pin bar appeared here, what happened? At the support zone or buying zone, what happened? Price went up again and surpassed the previous high. This was a previous high. It surpassed it, then go to $2.29. And that is how you can trade. That is how you can trade. So do not be afraid of this. Look at it again. I told you that once you see this sign, these three candles at the discount area, it signifies buying opportunity. And what happened here? Immediately price swung down to this extent. It didn't spend much time. It rallied up from $1.68 to, first of all, it got to where? $2.52. Now retrace a little. They are, in fact, buying from here is very, very dangerous. But those who are scalpers can actually buy from this zone, and price go to this place, now came down to this extent. Now as you can see, the same thing, the same price that started from here, come back almost the same place again. You can calculate the candle, then put it in hour this thing or on daily. Know how many days it took it to come down to this place. It must come down. It must come down. And I told you some time ago that when if you look at my analysis using W and M pattern, you can see it forming here. W and M pattern. You can see the W, that when you see it at the discount area, the support zone, and this shape forms, knowing that price will surely go up. There is no two ways about it. Whoever want to counter it, you can counter it. Check, back test it. You will see that price must surely go up. And what happened at the premium side, which is at the resistance area, which is this side now? What did we see? The same M pattern formed again. And what happened? Price started coming down and come down all the way to where it started from. You can go on and on and figure out these things I'm talking about, that price will always come down to where it started from to cover it back, and that is what we call liquidity void. So see here, it started here, it went up to this area, now retrace a little, move up a little, then come down to there and even surpass the take off the previous low. It took off the previous low. Now we have a new thread line to start with. So always remember that price will always come down and cover it. So we can't overemphasize this. We can't overemphasize this. So you can use this as your trade setup. If you are using liquidity void, you can call it vacuum, because once as price move up from here and go to this place, let's assume we cover this side, it has created a vacuum that it need to come and reprise, because it will not continue to go up and up and up and up. It will come down and reprise again, do correction. Sometimes people say price has crashed. Yes, price has crashed from its all-time high, coming down to reprise again, if possible, even surpassing the other low. So with this strategy, you can become a very powerful trader. Nothing, you will not be afraid of the market. So if you find this video helpful, try and subscribe to this channel so that I can be bringing to your knowledge, to your notice. You will be the first to be notified when I upload new videos. Thank you very much, and remain blessed and good trading.